Unsustainable national budgets, stubbornly low inflation, loss-making banks. Europe is still far from recovery, but just how far? To help me answer this question, I'm joined by Michael Sullivan, the Chief Investments Officer for UK and EEMEA at Credit Suisse. Thank you for joining me, Michael.
Silvia.
So just how far is Europe from looking healthy again?
Well, let's go back 2 years, so we can maybe then look ahead to the next 2 years. Almost 2 years ago, Mario Draghi made his, what some people call his Dirty Harry speech. He will do whatever it takes. And then Europe was confronted by a number of headwinds, possibility of sovereign default countries leaving the Eurozone, political instability, austerity was in full swing, and of course the banks were in trouble. And today things have changed and changed quite dramatically from a market point of view. The pendulum has swung the opposite way. We still have political stresses, but they're at a different level, I think, of a different quality. In some countries like Italy, I think there's a sense of maybe a budding sense of change. We are, I think, maybe towards the end of austerity. I think there's still a lot of work to be done in terms of the quality of the banks in Europe. We have the stress tests and the asset quality review coming up in the next couple of months. And then, of course, what the ECB is doing with the next wave of extraordinary monetary policy is going to be key here. So
this moment really could be one of those turning points for Europe, and especially for the banking sector. So you obviously mentioned the ECB. And a lot has been done from a European level to try and support, as you said, and do everything that is necessary to, to support the banking sector and the national economies. But have things really changed at a local level in these banks?
Well, I think actually what's interesting is that nothing has been done, in that Mr. Draghi has not been asked to deliver by the markets just yet, but he's now at the point where he has to do so. In terms of the quality of banks and banking reform, I think there is definitely a worry that as we've gotten away from the urgency we saw 2 years ago, a lot of the very brave reforms that were trumpeted then, banking reform, the possibility of fiscal integration, political integration, etc., that we've just slowly edged back from those. So there's not really been any big structural change in terms of the European project, and it hasn't really. There's a sense that it's not going to leap to the next level. In terms of the banks themselves, I think there's not yet a big debate about the quality of management issues in a lot of the banks, morale, etc. I think one thing I would point out as well is that in some of the periphery states, the skills of lending officers are still, I think, geared towards lending on the basis of property, of assets, and not really to assessing cash flow based projects. And that's what the ECB wants to do by trying to funnel money down to European businesses. The banks are the important conduit there, so the lending officers need to have those skills. So that's one of the microeconomic issues that's I think maybe going to clog up the plumbing system just a little bit.
What do you think is needed to make this work, to make sure that banks, which are crucial obviously in national economies, especially when they look at SMEs, that they implement these policies that the ECB really wants them to implement?
Well, what I would like to see, and this is less for the ECB, I think more for pan-European authorities and also for national governments, is I would like to see the debate move from regulation, which is very, very heavy, and towards two areas. One is innovation, so things like mobile banking, which is taking off in the emerging world, internet banking, so new forms of banking and new forms of reaching consumers. And also I think, and this is a bit boring, but it's very, very important, but a focus on the management and how the existing, and in many cases the state-owned banks are run. And I think while a lot of change has been proposed to balance sheets, there's not enough change in terms of actual structures and operating structures.
Is this possible at all, in the short term at least?
I think we had the impetus for this 2 years ago. I think the next hurdle to get over would be the asset quality review the stress tests, and that I think will draw to a close the debate about banking balance sheets. And then I think we have to move on to really look at innovation in banking across Europe, and of course the operational issues.
Thank you very much for your comments.